What is the tax assessor's role in property improvements? Have you ever wondered how property improvements affect your taxes? Understanding the tax assessor's role can clarify this process. The tax assessor plays a vital part in determining how property improvements impact your tax obligations. Their job is to identify, evaluate, and establish the taxable value of any new construction, additions, or significant renovations made to a property. This evaluation is essential for property tax purposes. When a property owner makes improvements, the tax assessor first receives information like building permits or reports detailing the changes. They then inspect or review these improvements to classify them. The assessor distinguishes between routine maintenance, which does not trigger reassessment, and assessable improvements that do increase the property's value. For example, adding a new family room or a swimming pool qualifies as an improvement. However, simply replacing a roof with similar materials is considered maintenance and does not affect the assessed value. Once the improvements are identified as assessable, the tax assessor estimates their fair market value. This estimation often relies on standardized cost data and market analysis. The new value is then added to the existing assessed value of the property. Importantly, only the portion that has been improved is reassessed, not the entire property. A new base year value is established for the improvement, which will influence property taxes moving forward. In cases where improvements occur on leased property, such as commercial leasehold improvements, the assessor must evaluate whether these changes qualify as new construction. They ensure that these improvements are properly assessed on either the secured role or the unsecured role, depending on ownership and lease terms. The tax assessor also maintains detailed records, including updated maps and assessment rolls, to reflected changes in property characteristics and values. Property owners have the right to discuss or appeal the assessor's valuation if they believe it exceeds the market value. To sum it up, the tax assessor's role in property improvements includes detecting and classifying property changes, determining which changes are assessable versus routine maintenance, calculating the fair market value of assessable improvements, updating the property's assessed value, maintaining accurate records, and providing a process for property owners to appeal assessments. This ensures that property taxes are fairly based on the current value of improvements, aligning tax liability with the enhanced market value resulting from those improvements.